James Packer personally stands to make $3.2 billion or so from the sale of Crown Resorts to US private equity firm Blackstone. Now, of course, yesterday Crown's board accepted an offer for $13.10 a share from Blackstone. That's a pretty good figure for them because the share price hasn't been at that point since back in 2019, prior to all of the inquiries into its affairs. Shareholders, including Mr Packer, who still owns a 37% stake in the company, they still have to vote on the deal. It also does need the green light from Foreign Investment Review Board and the gambling regulators of New South Wales, Victoria and Western Australia. The shareholder vote on that should be in around April or May. Crown closed up yesterday, as you would expect. Let's just check the markets now. So we are expecting a fall on the ASX when it opens. BHP is going to report today, so we'll see how that goes. The Dow's down around 0.5%. I'm sorry to say that if you are going to fill up today, oil is now at $96 a barrel. Well, for more on finance, we're joined by ANZ economist Adelaide Timbrell. Adelaide, good morning to you. We keep on getting trickles of economic data teaching us, or telling us rather, how we are recovering from Omicron, and you've been taking a look at how cafe spending is going and what that actually means for whether people are going into the cities of Sydney and Melbourne.
Yeah, so when we look at, total spending data and confidence in January, we can see that through the second half, people are really starting to become more confident and spend more money despite Omicron cases. But when we look in the CBD, it's really a different story. So compared to pre-COVID levels, the number of transactions at cafes, so not the amount spent, but just the number of people tapping those cards, was about 40% of pre-COVID levels in January in Sydney and Melbourne. So what that means is there's far fewer workers in the CBD Monday to Friday, particularly in those bigger cities. When we look at Brisbane, it's very much the same, whereas in Adelaide and Perth, it's actually around the 70% mark, so much more resilient. This is partly because people are still a little bit cautious about getting out and about day to day due to Omicron, but a lot of it too is that real persistent popularity of remote work. So people working from home more days of the week than they did before. And this is something that we'll probably see come through longer term with more online shopping and more economic activity out in the suburbs.
For the cities, though, there's a lot of hope being put on the return of international travel, which resumes next week, but you've got a bit of a tempering warning about that.
Yes, so international travel, first of all, is only 25% of our total tourism dollars in Australia, and 75% is actually Australian residents travelling within Australia. So when it comes to the total tourism recovery, we're actually a lot of the way there already in terms of where we can go and who can travel. When we look at CBDs, international education will be one really key sector. Online education will kind of slow that a little bit, but we should see some growth there. And then there's business, of course, which is a big part of CBD tourism. All those five-star hotels are mostly business travellers. Now that a lot of stuff is happening over the internet, I'm doing this from my living room right now, we are going to have a higher threshold of the cost benefit for businesses to actually move people internationally. And for holidays, it's all about the logistics. So we will see a slower ramp up than we, have in the past. And also, I think international travel is one of those things that people think is a really big part of tourism, but it's actually the smaller part.
Yeah, I know that a lot of companies are saying, look, why would I fly you when you can do just as good a job over the internet? Just really quickly, Adelaide, before I let you go, obviously with people returning, international students returning, that adds to the job pool. We do know the job ads are still elevated. When are we going to see that trickling down to higher wages?
We do expect to see an acceleration of wage growth through this year, and that's why we do think interest rates will eventually rise later this year. So what we're seeing is even through Omicron, through the worst of those outbreaks, a lot of employers were still looking for workers, and job ads actually only went down 0.3% in January, which is a tiny, tiny change, and was actually coming up through the end of January. So what that means is there's still lots of jobs out there. There's still very few unemployed and underemployed people, which means that as people resume job switching, as people, bargain a little bit harder because they've got a backup option somewhere else, we will start to see wages grow a lot faster than they have in the last 8 to 10 years.
Okay, Adelaide Timbrell, live from her living room. Thanks so much.